Welcome to the Trading Lounge, and here we're looking at the ASX 200, the CFD on the cash market, and we'll take a closer look at the indices, the US indices and the European indices and our indices here in Australia have all got some sort of relationship sort of happening, and I think we just need to just take a little bit of time and explore them a little bit further this time. There's a couple of variations on things, and looking at the ASX 200 here, this is a reasonable wave count, which would be in line with the bank. So that was the previous high over here, and we've been watching it have its correction. We ended up, because of the structure developing here, we label this as a wave 4 here, and we're looking for wave 5 to the upside. So if this is correct, you can see that we've obviously got more to the upside to play out through here, and in using the trading levels here, normally if we get support on top of a group 1, there's minor group 1 and subgroup 1. In this case it would be 5,300. It's okay for the price to trade above it, but what we're looking for is as a tested support on 5.3, because what that means is that it somehow psychologically separates one's thinking en masse from the closest largest number, the 5,000 here, and support on 5.3 would see us at 5.5. So that's just something that we'll keep in the back of our minds for the time being. But this is the wave count as I see it so far. We've got up for one here in quite a clean sort of 5 waves here. The retracement here, this could actually be the retracement could actually be counted as an A and a B and a C wave to here for the wave 2 to here. But it would still leave wave 3 up here, so I don't think it's not making a lot of difference as such. So let's see how this plays out through up here. Obviously this wave 3 here and wave 5 here from wave 4 can be moved further up here. We could start counting this as up for 1 here, back for 2, and a third wave moving up, and a fourth and a fifth, which will take us higher up through here, and then we could see wave 4 and wave 5. So there's still more to be had there. And that would be pretty much in line with the banks as well, because the wave counts we've been using with the banks is pretty much the same as this. Obviously each bank is slightly different and doing slightly different things, but they're all got that sort of general direction there. So as I mentioned just before, this is still the same market, but just with the wave 1 to here. Wave 2 could be here to here, not that it makes sort of any difference, but just getting into the intraday count here. And on Friday with the ASX 200, if I've got that here, yeah, look, we had this sort of real sort of selling volume, really, in selling price action rather, but we had less volume than it wasn't a continuation of lower prices, higher volume, and so to speak. So it is still corrective wave count here and pattern, and the volume sort of confirms that. So we're still looking in one way, up for wave 1, back for wave 2, and up for 3 and 4 and 5 further up through here, and that would be in line with if we look at Europe here. This is the FTSE here, so we can just bear with me while we just count this. This would be wave 1 and wave 2 to here, such. Then wave 3 would be the 1, 2, 3, 4 and 5 up here further, so that would be the wave 3 here. So this is slightly different really, and pretty much starting on the same dates. Whoops, that should be a 3 there, sorry about that. Wave 4 to here, and then we've got wave 5 moving up. So the FTSE, has got a relationship to our markets as well, so we need to be mindful of that. And then this will move up through here. With most of the indices, it was pretty much the same sort of story here. The NFP figures that we were expecting to be softer on the Friday because of the private employment figures on the Wednesday, it wasn't the case. So it was a little bit left field. So instead of having the average consensus of 138, it ended up being 165,000. Thus the wave 3 up through here, and that would be there, the wave 4. Let's just pop it here as a retest of the 65 possibly, but if it finds support on top of 65.30, the top of group 1, then we can expect it to move straight up from that point there. So I'll just save that while we're here, but I need to adjust that. So look, most of the indices have got, when we're looking at the Dow in a minute, the S&P 500, and the same for the DAX as well, we're tracking this little 5-wave structure to the upside. But you can see that with the FTSE here, if this is going to be wave 5 here, then there's going to be a larger correction across here. Okay, so this is important when it comes to the to the US markets, and the reason for that, because around the 18th here, where the low was on the FTSE here, and we've got this on the Dow here. Now this can be counted the same as the FTSE going to the upside. So instead of having wave 3 here like we're looking at the moment, it could also be wave 5. So that's the reason that I've showed you the FTSE there and counted it up, because with the Dow here, it can be wave 5. We're looking for a top here, so that would mean up for 1, 2, 3, 4, and 5, the same as the FTSE, and finishing at wave 5 here. But there is a reasonable possibility that it's the top of wave 3, like the Australian market that we looked at. It wouldn't be in there yet, but it would count this up here as a 5-wave structure up through here in terms of the 1, the 2, 5 waves in the third here, the 1, 2, 3, 4, 5 for the third, the fourth and the fifth for wave 1, the ABC for wave 2, and then wave 3 moving up. And wave 3 obviously is moving up, like got the personality of a wave 3. So this wave 3 here, so we'll be looking further up through here. But with the FTSE at 65, which is a medium level, and also a medium level now for the Dow Jones at 15,000, 5 being the second strongest number, we could only expect, you know, some sort of larger correction here. So that's kind of what we're working through. The same with the S&P 500 at 1600. So we'll see this move up here to get this 5-wave structure moving up through here. Then there'll be an ABC back across here in one way or another. Then another move up, and then a larger correction as well. So we should see some larger swings across here. Yeah, anyway, let's just see how we go. We know that with the bullish weekly cycle, that Thursday we're looking for a bear day, Friday stronger, positive, then that follow through comes through onto the Monday with profit taking on Tuesday morning for the first half of the session there. So it's the same with the S&P 500 here in terms of us counting this up. This top here could be the top of a wave 5, or it could be wave 3. Just don't know. So we're just going to keep an open mind about that. But what we can do in the meantime is we can just count these little guys up here as 1 and 2 and 3 up here and 4 and then 5 up through to here. Now, the same thing once again here. This is 1600, so we've got group 1 next, which is 10, 20, and 30. So if we get support on 30 here in this little sequence here, it's going to push up higher, then we would be looking at 1650 at that point there if it got support on the 1630. So it's something that day traders can just look at. The normal thing is that it would move above there, and then come back down and check into the 20 area here, bounce off the 20, then get support there, and then move off from that point there. But you should be able to count that reasonably well from, once this wave 4 develops a little bit further on the Monday there. Alrighty. Also, the China's coming back online here. This is the China CFD here. This is the one in Hong Kong dollars, and it's by GFT. And it's back on track and it's pushing higher. All this is representing an impulse wave here. It's a new contract, and there's not a lot of volume that's really coming into it at this stage here, but as a May contract future. So, but there seems to be more volume in it than trading in US dollars. So we'll just track this for the time being. Target here was 11,000, so we're looking for support on the 11,000. And if we do get support on the 11,000, then we can look all the way up to 11,500, which would be the medium level. But to get there, we need to get support on top of Group 1, which would be the 11,300. But all a positive wave structure from here, which is good. Let's have a look at commodities, as they were all positive following the indices up, except for the precious metals, which were very sluggish. Okay, starting with gold again, a daily chart here, and we're looking at it approaching the 1500 here, which is the medium level. And we're also still considering this to be a rally up through here, and this is a bit more obvious in silver than in gold, but just starting with the bigger picture here first, and we can see that, you know, most base metals actually pushed up on the Friday, and gold was a little bit sluggish in that regard. Now, this can be counted in different ways up through here, but still doesn't make any difference at this point through here. We know that this is a corrective move through here, and we understood that it would push up through there. This move that's pushed up through here, it's not quite in 5 waves actually. So I just got to see if I got it on a. Here we go. So the move up that it had up through here was more. It's more like a 1, a 2, and then a 5-wave sequence here for wave 3, and coming back for wave 4. So the NFP figures sort of rocked the boat here a little bit. So we'll just give it a bit of time to work itself out. Now, if it can get support back on the 1472, then it's supported, and then we can look at this being the wave 5 up here, moving up here further. Obviously, failing to get on 1472, then it's likely to roll over. But any move back up here for the time being is retesting the supply, the sellers up here. So the battle needs to be fought out here. We need to see that clearly first before we can sort of decide in terms of trading there so far. So this move up here obviously can be counted as an A and a B and a C wave. But let's just, I know wave 4 is overlapping wave 1 here, and that's a no-no, but breaks one of the Elliott rules, but it's the one that's broken the most when you're dealing with handling leveraged products as such. So we just need to give that a little bit of space to work itself out. But when we have a look at silver, you can see that silver was a little bit more, probably a bit more steady really in the situation, but it still hasn't really moved away from the pattern that we're tracking at the moment. And the pattern that we're tracking at the moment is the A, the B, and the C here for the A wave, the A, the B, and the C for the B wave here, and then we're looking at the C wave here. Now, it does appear that when you look at that, there's 5 waves there. Okay, so you know we could do that, and there's normally a relationship between these structures. So from here to here, so to speak, that A wave there's normally a relationship of that to the C wave here coming up through here. So, you know, I do wonder if it's, you know, still got further to go up here in terms of 1, 2, 3, 4, 5 for wave 1, back for wave 2, up for 3, 4, and 5, still further to go up through here. So it will be interesting to see if you know, if gold finds support on 1472. If that's the case, then we need to be looking at this scenario here. So let's just see how that plays out. The copper market as well moved up quite strongly, as you can see here on the 2-hour chart here. So I've had to sort of jig the wave count a little bit, still sort of corrective. We had this as an A and a B and a C to here, and that could still be the case. Not that it matters that much, because the A, B, and C would still be just the A wave here. Because this is in 3 waves here, it does take out the low down here, but because it's in a 3-wave price action, we have to look at it as being a B wave, and then we have to look at this being a C wave moving up through here, so in line with stock as well. So same sort of wave count as we've been looking at the indices. So we'll be looking at a wave 3 here, a 4 and a 5 here, which should take us up around the 335 here. Because the wave 3 here's got the extension in it, the wave 5, when it does occur, will be quite short. That may not be finished there yet, but it should be short, the same distance as roughly as wave 1 here. So we'll watch this top out through here. You know, when we look at when we look at commodity indexes and such, if we look at BHP here, when we're looking at the indices, say the UBS or the CRB index, all those sorts of things, they've all got this pattern here, which we're taking as a corrective pattern, even though they've got further to move to the upside, which we've been yakking about, and we based off the 65 here, so it'll be the same for this is US BHP here, but be same for the local BHP, moving up further as well from here, because we've got this 5 waves completed here. We need to see some sort of rally here. Like I said, it's okay to buy here, buy these things, but don't do the robo with BHP on a daily, better off with a weekly. It's sort of a bit of a buy and a hold and let it jump around for a while, so to speak. The oil market is such. Okay, this is just the weekly picture here. We'll start from here then. So we're still working through this triangle pattern through here, and it does appear that we've got like a smaller triangle occurring in the A, B, C for the D wave, because in a triangle each structure is in 3 waves. But the other interesting thing, because the market came from this direction, coming from up this way, and it's a triangle, which is a corrective pattern, but it's also a continuation pattern as well. So once it's finished, it will move to the upside. And this can move further up through here. I was just looking at the AMEX oil energy market, which is a daily chart here, but it's whichever way you look at this is a corrective move from here or a corrective move from here in 3 waves. So we will be seeing higher prices here on the AMEX oil energy index here. So it is still, from it's on group 1 here, the top of group 1. So we should see it push further up into the 144 area up through here. So there's still strength through here. If we just sort of move in, this is the daily chart here, a little bit messy, I know, but look, it's just we're just moving up into wave D here, and we're still counting that up through there. But look, essentially it's a retest of 100, and that's what we're looking at through here. So just nailing that in a little bit further through here, that's the 100, the orange line through here. Looking at this in 5 waves for the A wave, back for the B, and up for the C here. And this is pretty much the same as the base metals and also the indices as well. Oil follows stock, and that's that. So that's what's occurring here at the moment. Alrighty, let's have a look at FX. Okay, starting with the US dollar. The US dollar, we've been looking at this corrective pattern through here, and I just don't know if it's finished yet. We've had this sort of spike up through here, and it does appear to be in 5 waves up here. So as on the charts, we could put that in there as wave 1, so to speak, and then we would be looking for wave 2 to come back in through to here. But I'm just not quite sort of sold on that one just yet, because it's this structure down here. It can be counted to fit the 5 waves, but I think we should just, it's not going to be a big deal at this stage here if we just allow the market to play out across the 82 here, and let's just see if it becomes the support or the resistance through here. So another couple of sessions should see it sort of fit into here nicely, and if that's the case, then we'd be looking for wave 5 to come down lower than this one through here. So let's just allow that to play out. If that is if that is wave 1 up here, then that would make all of these over here as the wave 5 and of E and so forth, and then would obviously see this push up straight up through here. And if that was the case, we would see the euro push to the downside. And if it was going to push to the downside, we'd be putting wave C here and wave 2 here. But I also have to point out that we don't have 5 waves down through here yet. We can count this down as 1, 2, 3 here, and that's it. We can count it down as an A and a B and a C as well, and then still have movement to the upside, because this is not really complete up here, as I mentioned before, because we can have this as wave 1, wave 2 here, and then the whole 3rd wave up through here, and we're looking for a 4th to come back here, and then a 5th to move up through here. And I know that if this was going to be a 4th wave here, it's overlapping this, but that happens all the time in Forex. So, we just need to allow this to play out a little bit through here first before we start making any decision. I mean, any serious trade on the short side anyway would come once the 130 here was the retested resistance. So it's not like we're going to be missing much. And the other thing too is that the euro and the US indices normally run together as well. So if the the currencies really need to be supporting the indices and sort of vice versa as well. So it's important, we can't have the indices going up and this moving to the downside. It's just not a good look. It's better if they're correlated and they're moving together, and that sort of harmony's there. So just be a little bit mindful and diligent, I guess, until we've got this, until it's sorted out with the US dollar and the euro in the right place. Because as I mentioned, we need, for this to be bearish, we need 1, 2, 3, 4 here, which it is. We need to see a new low through to here somewhere to give us 5 waves. Then we'll get 3 waves back up, and then we'll get another 5 down. So it's not like you're going to be missing anything in the short term. The Australian one may offer a better trade as well. As you know, we've got a nice clean 5-wave structure down through here now, and we're looking for an ABC back for wave 2. The 61.8 retracement level would be in around here anyway. So we'd be looking for 1, 2, 3, 4, and 5 up through here. So we've got the RBA bringing out their rates on Tuesday at 2:30. So this is partly, I guess, any sort of rally that we'd been seeing through here was, buy the rumour, sell the fact, as pretty much always. So the short, if it was going to come, would come on Tuesday at 2:30. So look for that. Alrighty, well, that's it. So we can expect the indices to be positive through from Monday to Tuesday afternoon. There'll be profit taking Tuesday, and there'll be more profit taking on Wednesday, and even more on Thursday. So we just need to navigate that. But everything's pretty much on track in the way we expect it. So it's just a matter of getting the once you know the direction, you still got the problem of getting in and getting out, and managing your money and so forth. So always tricky business. Alrighty, well, good morning and good luck.